Let's talk about one of the most classic, yet misunderstood, plays in the world of gold trading, the Asia range into the London breakout. Many traders get chopped up here, but if you understand the story, the rhythm of the market, you can turn this daily event into a powerful edge. This isn't just about lines on a chart. It's about understanding the narrative that unfolds every single day. First, let's set the stage with story 1. The box. The Asian trading session often doesn't move gold with conviction. Instead, it builds a cage. It creates a defined area of consolidation. We call this the box. A high is marked and a low is marked. During this time, my bias is neutral. I'm not looking for trades. I'm not trying to predict the future. I'm simply preparing. I draw my lines, I identify the boundaries. This is the calm before the storm, and my job is just to observe and map the battlefield. The Asia session is for preparation, not participation. This leads us to story 2, the patience test. As the Asia session progresses, you'll often see price creep up and tap the high of the range. Maybe it even pokes its head out for a second. This is the first trap. Retail traders, eager for action, see this as a breakout and jump in, chasing the price. But the seasoned trader waits. Why? Because we know Asia breakouts rarely pay. They are notorious for being false moves. Their real purpose isn't to start a trend. It's to teach you patience. Resisting that urge to chase is your first win of the day. Then comes story 3, the London arrival. You can feel the shift in energy. It's almost tangible. The clock ticks over to the London Open, and suddenly the volume surges. The small, sleepy candles of the Asia session are replaced by wide, powerful ones. This isn't random noise anymore. This is intent. Big players are entering the market. London doesn't guess the direction, it reveals it. Our job is to sit back and watch what these big moves are telling us. The quiet preparation phase is over. The main event has begun. But here's where many get caught off guard again. Story 4. The fake first move. The first real push out of the Asian range often fails. Price breaks the high with force, triggering all those breakout buy orders, and then it reverses sharply, crashing back down, or it breaks the low, only to whip back up. This is a liquidity grab. The market is designed to take out the stops of impatient traders and lure in the chasers before the real move begins. When this happens, emotions spike. People panic. But professionals stay calm. They know this is part of the script. Liquidity almost always comes before true direction. This fake out is a crucial piece of the puzzle. Now for the moment we've been waiting for. Story 5. Confirmation. After the fake out, the market shows its true hand. Let's say the real move is to the upside. You'll see a clean, decisive break of the range high. And crucially, a candle will close outside the range. It doesn't just wick above, it closes with conviction. Then, often, price will pull back to retest the top of that old Asian range, which now acts as support. This is our confirmation, the retest holds. Our risk is now clearly defined. We can place a stop just below this new support level. The game has changed. This isn't the tricky Asia session anymore. This is London business, and it's time to get ready to execute. This brings us to story 6, entry with intent. The entry isn't a panicked click. It's a calculated decision based on the confirmation we just saw. Maybe it's on the successful retest of the range, or on a small bullish pattern that forms right after. The entry is deliberate. The stop loss is logical, placed at a point where our trade idea would be proven wrong. The target is session-based. We're not trying to catch a move that lasts for a week. We're aiming for a realistic target based on the expected volatility of the London session. There's no guessing, no hoping. Just clean execution at the right time for the right reasons. And often that's all you need. Story 7. One trade is enough. When London decides to move gold, it moves fast and clean. The price accelerates towards your target. Once that target is hit, the job is done. The trade is closed. And just as importantly, the chart is closed. You don't need to hang around trying to squeeze more out of the market. You don't need to force another trade. London gave you the high probability move. You executed, you profited. What happens in the New York session is optional. Trying to trade all day leads to overtrading and giving back profits. Discipline means knowing when to walk away. So let's tie it all together with the final lesson, story 8. Think of the sessions as different characters in a play. The Asia session gives us structure. It builds the box and sets the boundaries. The London session gives us opportunity. It provides the volume and the high probability breakout. And the New York session, especially during the overlap with London, often gives temptation. It can be volatile and wild, tempting you to jump back in after a good trade. Professionals understand these roles. They use the structure from Asia, seize the opportunity in London, and treat the temptation of New York with caution. They choose their battles wisely. To put it simply, mark the high and low of the Asian session. Wait for the London Open to bring in real volume. Be very suspicious of that first break out of the range. It's usually a trap to hunt liquidity. The second move, after the fake-out, is often the true opportunity. Remember to always trade with the session's momentum, not against it. Your goal is to align yourself with the big money flowing in during the London hours. And always remember this powerful closing line: gold doesn't move when you want it to. It moves when London decides. Understand their game and you can make it your own. Thanks for watching. I hope this storytelling approach helps you see the markets in a new light. Don't forget to like and subscribe for more content like this. See you in the next one.